Well, good afternoon. Hi, Amber. It's good to see you.
You too.
Well, we're back again another week, and every week I keep thinking maybe we're going to have like less to talk about, or maybe not so much is happening. And well, I'm wrong. It hasn't happened yet. There's still tons going on, tons of things happening in all aspects of real estate. I know Amber's got some things that she's going to be sharing with us. Of course, I'm going to geek out on some numbers. And before that, though, I wanted to spend a minute talking about the whole virtual learning school thing. Now that we're a week and a half in, Amber, how's it going for you and your kiddos?
They're doing fine. They're doing better than I am with it. They're kind of like, it's fine, mom. And I'm like, you don't know what you're missing out on. So we're dealing with it.
That warms my heart to hear that because I've got two of my three are okay, but my kinder, he's struggling. He's like, Mom, you told me this is supposed to be fun. It's so boring, and he's crying and he doesn't want to do it, and he's like, I don't want to look at my computer. He wants to jump and run and stuff, and so it's interesting. But I'm glad to hear that your girls are having okay time with it, because
Yeah.
that's
I mean, it's
it's
like an hour, maybe two. The kindergartner's like 30 minutes to an hour, so it's not a whole lot.
But at least, I mean, but if she can stay engaged that time, that's huge. I mean, my son's like, I'm out. I'm not doing it. We're working slowly. And that's one of the things, like, I'm trying to get a feel for it because we know that school is so connected with housing and where people choose to live because of the schools. And how is that going to be impacting everything? I know in some, actually today, Queen Creek opened their doors for in building learning. Santan, I guess, had over 100 teachers call out sick on Friday, so that is not opening today as planned. And we'll see. I know for us in Chandler, they're saying October 13th, and that's what I'm thinking. And we'll just keep watching it, and hopefully things go well and people aren't getting sick, because then the repercussions, we're just going to have to see what that means for all of us and what it means as parents and as people within this industry, because it matters a lot. Wanted to then kind of go in to talk about some, like, the national trends, and then kind of what does that mean for us boots on the ground. Some of the things that have kind of happened or been going on over the last couple of weeks were the third quarter earnings reports from publicly traded companies. And so the ones that we were paying attention to got Zillow, EXP, Redfin, Remax, News Corp that owns Move, that owns Realtor.com, Realogy. KW does earnings calls even though they're privately owned. But some of the things that, some of the trends that are coming out that we're seeing is, of the kind of big ones that we pay attention to in real estate, not surprisingly, a number of them, their Q2 numbers were not awesome. They were down year over year. And keep in mind, when we start thinking about a quarter, 90 days in this market is like an eternity. And so when we're looking at, a lot of them were down. So Remax, News Corp, which owns Realtor.com, Realogy, that owns Coldwell Banker, C21, ERA, Sotheby's. There's a number of them in town, and KW all announced that they had transaction declines and revenue declines. And you have to keep in mind, when you're thinking of Q2, that's April, May, and June. And June was gangbusters, but April and May wasn't. I mean, April is when we kind of hit bottom on everything due to the COVID side effects or outcomes. So we're watching that. But what was interesting is EXP had a 33% revenue growth, which is their biggest ever. Redfin had an 8% revenue growth, which is also significant, and Zillow 28% revenue growth. Now, some of those things, when you kind of dig in a little bit, make some sense when you start talking about, okay, Zillow had in the second quarter 2.5 billion visitors, and that's a lot. And one of the biggest kind of money losses that they've had was their homes unit, where they're, with the iBuyer, and they were not acquiring properties in the second quarter, but they were selling properties. So that's going to make their revenue go up when you're not spending it, but you are selling and making money. So that's going to be something there. I know Redfin was actually, Glenn Kelman, the CEO, was a little surprised at how significantly they increased. And a lot of things are showing that a lot of people are doing a lot of real estate searches. I mean, when you're home and you're stuck inside, so Zillow and Redfin both saw significant traffic growth, which again could lead into some of those revenue growths as well. And they have other kind of streams of revenue, not just one aspect, where some of the others, when we're talking about real estate transactions. And one thing to be mindful of is total real estate transactions by units was down 17.8% in Q2. So that's kind of very reflective of some of these other companies. None of them were down. Well, I guess Realogy was down 28%, but all the others were down less than that. No, I was wrong again. And Remax was down by 24%, but the others were down by less than that, roughly 18% in drop. Some of the things, though, that I think is interesting is SoftBank Vision Fund. Now, we've talked about them a little bit. They are the company that is behind the big money behind Open Door, behind Compass, behind WeWork, which we know what happened, we won't talk about them, but, a number of different big, giant funded organizations with billions of dollars in from venture capital. SoftBank actually, first quarter, we don't have the second quarter results, but first quarter showed where they actually made some money, which is pretty significant because that followed 3 quarters of billion-dollar losses. So again, we're kind of looking at, so is that, I don't know if it's a trend, we're just talking about 1 quarter, the rest of the year will be very telling, but it's something to be thinking about, is saying, okay, what are the companies that are growing their revenue? What are they known for? What are they doing? Are they the disruptors? Are they the ones that are, getting the eyeballs, and what are they doing in changing the consumer's expectations within real estate? So that's kind of where I want to think about just that really kind of 30,000 foot view. What does that mean for the consumer and for us boots on the ground? What are their expectations? And, that all remains to be seen. One thing that we can say for sure is all of our typical cyclical expectations of where we are in the year. That's not this year. This year is just different. We're not following any of the normal trends. For example, right now, luxury is booming. Second half of the year, luxury does not ever boom. And, I guess in July, it was in July in Phoenix, $1 million contract or $1 million plus contracts were up 93% year over year. And huge. And some of the other places, if you look at like the Hamptons in New York, you look at, the high-end stuff in California, that's all moving right now too. We're seeing transactions of $15 million, things like that, the ultra luxury. And you kind of watch ultra luxury, when that is moving well, everything kind of trickles down and follows. When ultra luxury kind of gets stagnant, again, it trickles down, and we sometimes will see some stagnated growth. What a lot of people were really surprised to see this kind of volume that is happening with those high-end transactions. So we're going to see how that kind of plays out for us. So I'm kind of just thinking about what else is going on. Oh, our unemployment numbers. I'm going to talk about unemployment briefly. In July, those numbers came out a little over a week ago, but in July, we gained $1.8 million jobs. So again, we still did, definitely had some losses. Can't ever deny that, but it's really good when you see a number of, that big of a gain in new employment. And then as we start looking at some of the weekly numbers, what I think is really important is the last week numbers that came out. We had our first week where we didn't have 1 million new unemployment claims. And, albeit a small victory, it's still a victory. And we're seeing the continuing unemployment claims has dropped down to only 15.5 million. And we're going to keep watching that. I know that with the mandated, kind of the the Band-Aid to get us through until Congress can come up with a new plan of, you know, pandemic responses. We've got some more money coming back into unemployment. So hopefully that will help with, you know, some of the things that could happen. We don't know yet. Fortunately for August, we haven't seen a lot of missed rental payments. That is one of the things that we're watching because of so many of the jobs that have lost have been in the service sector and been with lower income earners, and a lot of them tend to be renters. So again, it's really reinforcing that the housing market is remaining super strong, and a lot of the people who've lost their jobs are not homeowners, but we still need to keep, you know, they still need a place to live, and we want to keep them in those rentals, and we want to keep the cash flow going to the landlords, because we know that 96% of rental properties are owned by kind of like mom and pop shops of, you know, individual people who are landlords, and not everybody can hang out and wait 6 months for a payment. You know what I mean? So lots happening on that end, lots happening. I mean, and, you know, I just said to Amber, I was like, you know, how long are we going to just talk about where these insanely low numbers for inventory? There's just nothing on the market. And when things are hitting the market, they're going super fast. We have seen some slight increases, but they're getting absorbed really, really quickly. There's lots of, you know, continued bidding wars. We're hearing things closing for way above asking. We've got some numbers, I have it somewhere, that talks about, I mean, it was something like, bear with me. Well, oh gosh. Well, I'm interrupting my own thought of, it was like 50% of transactions closed above asking. It was huge in July. And then now in July, our appreciation was 12.5%, and that's our annual growth, and that's frightening. So I know I've just been kind of yammering on about all these different things. Amber, there's a number of things that I kind of wanted to address with you. The first one, as we dive in, and I know you have some things that you want to talk about, are appraisals coming in low. And Amber, what did you just tell me?
I'm not having that a whole lot. I mean, we've had a couple, of course, but we're doing a lot of purchase business, and a lot of them aren't. And I think that the key is when that listing agent is putting together that solid package for the appraiser of why this home should appraise, all the different offers that they had, making sure that they know the interest, right, that they had in that home, and whatever upgrades have been done, everything that they can do, right? Those are the ones that we tend to see be successful. And when the listing agent is not involved or putting that together, those are the ones we tend to see come in low.
And that's huge. That's so important to recognize. And some of the things too are even having those conversations with the appraiser ahead of time, making sure that they are familiar with the area, just talking to them. They're people too, you know.
Well, like when we're putting a loan into underwriting, we're doing a cover letter painting the story, right? We're like telling them all about it so that when they look at that loan, they already have an idea in their mind of what we want them to see in that loan story. Same thing for the realtor to the appraiser. If the appraiser goes in dark, goes in blind, and he's like, oh geez, they're, you know, 30,000 over asking price, I'm going to figure out if this is really valid. Or it's like, here's a story, here's all the work they did, here's how many offers that we had, blah, 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 blah. This one's, you know, closing down the street here, this one's under contract here, whatever you have. They immediately just have like a different mindset going into that appraisal of like, wow, it sounds like I should figure out how to support this, you know, type of thing. So it's like painting the picture for them that you want them to see instead of the picture that they might see that you don't want to be the case.
That's powerful. That's super powerful. Mm-hmm. So what else, Amber? What else is happening in the world of lending? I know there's some big news.
Yeah, I mean, last week what happened was like overnight, Fannie and Freddie implemented a 0.5 point cost on every single refinance. It's the first time in the history that they've implemented something like instantaneously. It takes effect on any loan sold to them after September 1st. So we have a lot of lenders with millions and billions of loans that have not been sold yet that are still on their books that they're going to get hit with. So that's going to be a very large penalty to all of these lenders that they were not expecting. And then also then overnight, every refinance got more expensive. So that half a point, you know, if you had a $300,000 loan, it's either $1,500 extra in cost to keep the rate the same as it would have been without it, or it's like 1/8% higher in interest rate, right? So we've had to have a lot of conversations about that. And it really came at the same time that the market started to get a little worse. So we saw interest rates start to trend worse for the first time really since we've had, you know, these interest rates decreasing. And so it felt like the market got a lot worse. We're still locking people in the high twos. So, I mean, this is not any cause for alarm, but it is a reminder that no one knows how long that this will be around for. No one knows what's around the corner. So take advantage of it while you can. Remember to tell your clients how advantageous it is, and that every person in your database really should either be refinancing or be selling to buy a new home. Like, there is in every single client some sort of transaction that they should do if they've been in their home for at least 6 months. So make sure you're reaching out to them and figuring out which solution is best for them.
It's huge.
Yeah.
That's huge. And, you know, my biggest takeaway from everything you said is, yeah, some of these things happen. They happen overnight. And it's kind of a shakeup within the lending world. But big thing, you're still locking people in under 3%. These are like the best rates ever. So
I had a client last week be like, oh, 2.99, that's so high. And I was like, are you for real? You know, people just have, you know, memory loss, and they do not remember that any, like, a rate with a 2 in it, like, that's insane. So we'll get accustomed to this, but this is not going to last forever. So strike while the opportunity is here.
Definitely. Awesome. Well, Amber, I, as always, appreciate your awesome insight and having these conversations with you. So thank you for your time, and I look forward to seeing you again next Monday afternoon.
Yeah, sounds good. Thanks for all your information, Sarah. Appreciate it.
Time. We'll see you later.
All right. Bye.
Bye.